Hello, welcome back. Thanks for tuning in this week to this wacky world of real estate we're living in right now. I have statistics from a lot of the country, not all places reported. Places like Quebec and Saskatchewan, and of course the East Coast, I don't have, but I do have most of the other places. But first, I want to ask you, do you think Canada is the land of opportunity? Because it once was when I came here in 1988. But anyway, let's check out a post and the reactions to it. And I want your reactions in the comments also. All right, so here's the post. Now, I almost got ratioed on this post. I have 582 comments to 653 likes. Now, didn't almost get ratioed because people did not like what I said. They just gave their feedback and they wanted to weigh in on what I said here. Canada, the land of opportunity. This was the saying when my family immigrated here in 1988. Is this still true? Kind of a neutral comment. I'm not pushing people either way. But the comments, again, not surprising given the mentality of Canadians and the economic status of this country these days. But let's read through a few of them. First one, Alberta is the land of opportunity. Everywhere else is brutal right now. And of course, so I've heard. Canada is the land of seduction by poverty. Those were the days long gone. Canada, land of tax slave. Yes, the opportunities look a little different. Running a 30-year-old playbook probably won't work. Here's one according to Grok. John Flynn's post reflects a growing sentiment in Canada about diminishing opportunities as replies highlight economic struggles, high taxes, and dissatisfaction with immigration policies under leaders like Trudeau and Carney, who succeeded Trudeau in 2025. And it goes on to say more. Well, I saw a dozen foreign students walking away from a food bank, each of them carrying two of the largest reusable shopping bags available. If you're willing to scam the system, it's the land of opportunity. Nope. Oof, tough question, hurtful answer. If you're an elitist, globalist, absolutely. I suppose it depends on what kind of opportunity you're looking for. Doesn't look like it. Not even close. Anyway, I can go on with these comments, but I'm looking for one positive comment. I can't even get one. This was not a loaded question. This was just a neutral, fair question to ask based on my experiences. And the sentiment in Canada is very poor right now. I hope it changes for Canada's greater good. Anyway, let me know in the comments what you think. Do you think Canada is the land of opportunity or was the land of opportunity or whatever your thoughts on it are? I'd love to hear them. All right, let's get into some of the latest real estate posts I found on X. And of course, we have the usual players here. Ban Rebidu, great posts as always. Canadian house prices have seen the largest decline from peak in over 30 years. And there they compare them. 1989, they dropped to almost 13%, 12.5 or so. February 2008, just around 9%. 2017, they dropped just under 8%. And February 2022, they dropped almost 16%. So, of course, that was a huge drop. And this is percentage-wise, not even dollar figures. So, yeah, we saw that big drop. And look at 1989 now. I want to go back to 1989. 1989, 12.5%, 13%. That was the beginning of the crash. Remember that. It didn't rebound. Actually, the low was in 1995, I believe, if my memory serves me correct. So it was a long recovery. It didn't actually start recovering until about 1999. But yeah, so we're in for a long haul here. And yeah, February 22 was a big drop there for sure. Another usual suspect here, Daniel Foch. Canada's rapidly slowing population is a red flag for rent growth. So they have it divided here by the quarters, Canada's population, quarter/quarter percent change. And you can see there in 2023 Q4, we're up almost 1%, 0.9% in one quarter. Our population was growing. Now it has slowed down to less than 2022 levels. And so, yeah, we're seeing that population growth. Now, this is still growing. Our population is still growing, mind you, but it's growing at a much slower pace, thankfully, because I honestly believe we had too many people come in too quickly. We can't accommodate that many people. People are living in basement apartments and 250 square foot condos and whatnot, and that's the issue. Most of the calls I get these days are for rental properties because I have a lot of rentals that are listed under my name for a management company we work with. I get nonstop calls from agents, tenants, everybody, and most of them are foreign. Most of them have thick accents and just from all over. It's not just one part of the world. They're from many, many different places. Condo prices in the GTA expected to drop another 10% this year, says TD Economics. No, really? That's a news to me. I would have never have guessed. Of course they're going to drop 10%. At least I would see even more. Like condos, those shoebox condos, they're not made for families. They're just made for investors and speculators. No one's buying them anymore. There's huge inventory out there. 10%. So if TD Economics is saying 10%, you could probably count that it could be 20. It could be 5%, but it probably could be 20 too. So they're very conservative. They don't want to spook anybody. But yeah, they're even calling it now. So again, we talked about this in previous podcasts where, at the beginning of the year, we were having like a 6% increase in prices or whatever these people were calling for. Now everyone right across the board is calling for declines, price declines. They can't ignore the truth anymore. The facts are here, and we're seeing it happen. And it takes a long time. This doesn't happen overnight or in a month, and there's a lot of patient people out there. But yeah, we're seeing it unfold right now, this crash. This was a reply to one of my posts. I'm a realtor that works with lenders on defaults and power of sales. Business has never been better, but it's nothing to celebrate. So of course, it's nothing to celebrate because tough economic times. But of course, I obviously believe this statement because I track the power of sales and the mortgage arrears, and we're seeing those consistently increase over the last year or so. From Shazzy, there is no denying it anymore. Ontario's housing market is in free fall and everyone is racing to the exits. 3,200 square foot home, unfinished basement with separate entrance, 4-bed, beautiful double car garage, original selling price $1.5 million, now going for $875,000. Massive upgrades, exclusive deal off market. Call or WhatsApp. So this is the post by whoever, the realtor or the owner there. But yeah, I wouldn't doubt it. I've seen places in my region for $950, you get a 3,400 square foot home that's 9-10 years old, and it's still not selling. So yeah, there's a lot of things dropping, especially the higher priced homes. They're taking a huge hit right now, unless they are good quality luxury style properties. And the TREB numbers came out, I believe it was just this morning. I actually have them in my data, but this is a different presentation here. This is right from TREB. What a mess. Monthly GTA home sales down 23.3% from April last year, 2024, while active listings are up 54%. This really puts it in perspective. So you've seen 25% or so, 25% drop in home sales, and inventory active listings are up 54%. Look at the numbers here. 5,600 sales this year, 7,300 last April. And of course, that's the 23% change there. New listings, 18,000 this year, 17,000 last year. Not a big increase, still an increase, but it's the active listings here, 27,000 to 17,700 or so. So that's a huge 54%. That's a huge increase in active listings. Why? Because they're not selling. They're sitting on the market longer. Only the good properties that are priced right are selling. Everything else will sit. Buyers are picky. Buyers have control of the market right now. Average price, $1.1 million. Last year, $1.15 million. So yeah, year-over-year declines. We're going to get into those in just a minute in the stats. And that's a 4.1% decline from last year. Days on market, 25 this year, compared with 19 and 33 and 27. So days on market's increasing. Of course, you would expect this. This is what happens when the real estate market slows down, and things are going to correct or are correcting right in front of our eyes right now. All right, this next one is a political post, so hold your tears. My tears were flowing last week, so if you're on the other side of the fence, maybe you might not want to watch this part. But this is obviously a photoshopped case of beer here. But anyway, spotted at LCBO, a bitter, sour beer with notes of high crime and rising debt. Heavy on the palate with out-of-control immigration, lack of housing and jobs for young people. A crisp finish that will bury corruption and a 10-year record of failure. Enjoy with other rich people and public servants. Well said, actually. That does describe the situation right now in Canada very well. And from Shazzy here, I'm not going to play the video, but this is when he was on BNN or whatever it was last week. Ron Butler there talking about how small the condos are, and nobody wants to buy them. Like they built them all for investors, not for families, and this is what he says. And he says the city zoning in Toronto allows 250 square foot condos, which is like a hotel room. City of Toronto's planning department approved condos as small as 250 square feet. That is small for a home to purchase or live in. Again, it is like a hotel room. It's a room to sleep in. Maybe in certain countries that's fine, but Canada, the dream of Canada, is not a 250 square foot condo in Toronto that has nothing in it besides a bed and a small kitchen. Who in City Hall signed off on these shoebox apartments? 250 square feet isn't livable for a single, let alone a couple or family. RIP condos, you asked for it, and it is. The condos are just taking a beating right now. And on that same topic here, Hutchie Man, he's a realtor in Vancouver. Actually, I've talked to him a few times. We do a little bit of business together, actually, believe it or not. But yeah, many of the condos for sale in Toronto are currently 500 square feet or less. At Ron, the mortgage guy, said that in Toronto, there is now a roughly 30% failure rate for condo closings, meaning many buyers simply walking away from their deposits. Yeah, and I don't know if they're getting sued. I'm sure some of them are getting sued. We've heard stories already. But yeah, why would you close when you can never sell the unit, you can't rent, you can't break even? It was a bad investment. Walk away, hope for the best, I guess, is what people are thinking. All right, let's get into this week's stats here. I'm going to start with this one. And this one, I was just thinking about this the other day, and this is not current stats. This was from the last month whenever Korea released their national data. But here you have 208,000 people bought here at the peak. This was the peak. This was not the other peaks there. So these are all higher prices. So 208,000 sales, not even people. There could have been couples, families that bought these, a lot of investors and speculators. But all those people are all underwater, and many of the people at those other peaks too are underwater. But yeah, 208,000 there. I thought that was a really interesting number. All right, here we go. Starting off with the sales to new listings ratio for April. And again, I don't have everywhere, but I had everywhere that was available today. And now I want to look at this blue line here, a third of the way across the screen, that vertical line here. Everything to the left of that in blue is buyer's markets. And you see them all. Like, look at all these places. And if you look at the gray was last year, comparing last year, of course. So this year, it's all closer to buyer's markets or in buyer's market. The market is worse off. It's not balanced. It's not a seller's market for most places. We're further into that buyer's territory. But there was only 4 of these places last year that were in buyer's markets. The rest were either in balanced or seller's markets. This year, almost all of them are in buyer's markets. And yeah, it's you see them, all the places there. York, Peel, Barrie, Fraser Valley, Toronto, Halton. Like, these are major places. Greater Vancouver, Niagara region, Kingston, Windsor, Essex, Guelph, Durham region, Victoria, and Northumberland Hills. I don't have Newfoundland this week. Waterloo region, and so on, all in buyer's territory. And then you have a few that are just close to buyers, in buyer's territory, according to Korea data. Actually, they're under 45%, but according to my data, I don't use the Korea benchmark for that. But yeah, then you have Edmonton in a seller's market and Calgary in an overheated seller's market. Now, I think that was an anomaly for this month because their prices actually went down for April. But yeah, we'll get into that in just a second here. Here are the month-over-month price changes from March to April this year for all of these places that are listed or that reported already. Calgary down 5.1% month over month. Now, we did see this data where they had an all-new high actually last month, but the data of the sales and the new listings didn't really support that. It was, again, average prices are kind of a poor measure sometimes, but this is what's consistent across the country. This is why I use it. And Calgary down 5.1%, Peel region down almost 5%, Kingston area down 4.8% month over month, Fraser Valley down 4.6%, Greater Vancouver down 2.2%, Barrie down 1.9%, Northumberland Hills down 1.4%, Windsor Essex down 0.5%, pretty much even. Same with London, Peterborough pretty much even, Halton up a bit, Guelph up just over 1%, Durham region up 1.4% month over month, Edmonton up 2.1%, Waterloo region up 2.8%, Ottawa up 3.4%. All those bureaucrats going back to work here. The government's back in power here. Ottawa's probably a good place to invest. Don't take my advice on that though, but seems like they're pretty consistent in Ottawa from all those government jobs and all those public service jobs up there. They're very secure until things happen, but nothing bad happened up there recently. So Niagara region up 4.1% month over month, Toronto up 4.2%, York up 4.4%, and Victoria, BC up 7.2% month over month. Victoria's been doing very well for some reason, but yeah, we're going to check out some more numbers now in a second from them. And of course, next we have the dollar change from the peak, how much a place has gone up or down. Most places are down, as you can see here. Peel region down $332,000. Durham region down $318,000. Halton down $303,000. Fraser Valley down $297,000. Now, let me remind you, this is the spring. So what happens when the summer comes and the winter comes? This is the spring when these losses are supposed to be minimized, and we're seeing still lots over $300,000 at the peak of the spring market here. York down $289,000. Guelph down $255,000. Barrie and Simcoe down $233,000. Waterloo region down $222,000. Peterborough down $210,000. Northumberland Hills $190,000. Niagara region $183,000. London area $181,000. Windsor Essex $140,000. Greater Vancouver $135,000. Kingston and area $116,000. Toronto down $95,000. Ottawa down $73,000. Calgary down $31,000. That's just from last month too. They hit their peak last month, but they dropped, big drop in 1 month. Victoria down $30,000, and Edmonton another new high. They set a new high in March of $10,000 higher than the previous month, and they went up another $10,000. And I think this is because we're seeing like these equalization of prices. Can't afford Calgary, can't afford wherever. You move to Edmonton, that drives up their prices, but they'll only go up so high. But yeah, they're still seeing new highs in places like that because it's still relatively affordable compared to other places. And those percent changes, here they are. Durham region down to Peel, Peterborough, Guelph, all 23 to 25, 26% there. Then you get Fraser Valley, Barrie, Simcoe, London area, Waterloo region, all that 21 to 23%. And then from 20 to 21%, Northumberland Hills, Niagara region, Halton, Windsor, Essex. That's again, this is just normal, 20% drop from the peak, no big deal here. Nothing started yet. We haven't even hit the crash yet. This is just the beginning. York region down 18.6. Kingston down 15.6. Greater Vancouver down 10%. Ottawa down 9.3. Toronto down 7.6, which is not a lot there. Calgary down 4.9. Victoria down 2.7. And Edmonton up 2.2. Now, talking about those big cities, you're not seeing huge losses there, which shows us and tells us the crash has not started. When the crash happens, if and when, I'm guessing it's gonna, especially the way the economy and the unemployment's going, you're gonna see it in those big metro centers. It doesn't matter how many people immigrate here, when people are losing jobs, this is when you're gonna see. So when you see those places start to lose value quickly, just imagine what's gonna happen to the rest of the country. But they are showing some weakness in the year over year, so we're gonna look at that right now actually. So Peterborough, this is the year-over-year price change from April this year to April 2024. Peterborough down 7.3% year-over-year. Peel down 7.1% from last April. Kingston and area down 7%. Now we're looking at the big cities here. So the big cities are seeing these year-over-year declines. Greater Vancouver down almost 7% from last April. Fraser Valley 5.5% from last April. Halton down 4.5%. Barrie and Simcoe down 4.2%. York down 4% almost. Durham region down 3.1%. Niagara region down 1.5%. Guelph down 1.2%. Windsor, Essex pretty much even there. Same with London area. Ottawa, not a big change, up 0.5%. So Toronto is seeing just a 0.6% increase from last April, which is nothing. So the flat sales there, again, biggest city in Canada, biggest population growth in North America. Remember, I showed that chart last week, and they only saw a 0.6% increase in the average price from last year, from last April. Waterloo region up 2.9% from last year. Northumberland Hills up 6%. Victoria up 7.9%. Edmonton up 9% year over year, and Calgary up 10.7%. And of course, looking at this chart, you'll see there's a lot more areas that are down year over year than are up year over year. All right, so that's it for this week. Thanks again for watching. I got to run. I got a lot of stuff on the go today, not just work, but all sorts of stuff. But until next week, I'll see you then.